everyone. Welcome back to Master Your Money and Mindset. I am your host, Elizabeth Hiza, Chief Marketing Officer here at Barnum Financial Group. And today we are talking about something that is not overly exciting, but always necessary. Our topic today is life insurance and the biggest myths surrounding life insurance that we hear here at Barnum Financial Group. Now, before you go ahead and turn this podcast off, I want you to stay with me because what we're really talking about today is why so many people are making big financial decisions based on myths that are not true. So I know life insurance is not fun. I know it's boring. I know some people think it could be a little bit morbid. I totally respect all of those feelings. However, it is necessary. Planning for the unfortunate incidences is just necessary and smart. And it's a reality of the world that we live in. A very popular phrase these days is YOLO, right? You only live once. And none of us definitely want to sit with the only once part. That mindset is completely human, but it's also exactly why so many people either avoid life insurance altogether or have developed some pretty big inaccurate opinions about one of the most important financial tools out there. So today, I just want to bust a few myths about life insurance. I think a few of them will generally surprise you. This is going to be a very quick episode. It's only me. I didn't even bring on an expert to go too deep into anything. So we're gonna blow through these quickly. But I think they're going to be tremendously helpful in getting everybody to understand why life insurance is so important. Okay, so myth number one. The number one thing that we hear at Barnum Financial Group surrounding life insurance is the cost is too high. The biggest myth is people always start the conversation saying, I can't afford it. Without even having a conversation, people assume they can't afford it. And that's fair, but let's just unpack that a little bit. The numbers completely contradict that statement because about 72% of Americans overestimate what a basic term life policy actually costs. That's a really big number. So what that means is if I ask 72% of people how much they think basic life insurance costs, they would tell me a number that's 2 or 3 times the actual cost. So the data shows that a 20-year, $250,000 term life policy for a healthy 30-year-old can cost under $200 a year. A $500,000 policy, which is, broader coverage, more coverage, can run as little as $23 a month for a healthy 30-year-old, for a healthy 30-year-old woman or a healthy 30-year-old man. But that's roughly $1 a day. That's a tremendous amount of coverage for a very small daily investment or a very small monthly investment. Now, again, these are hypotheticals. We know that life insurance is based on age and health. So there's a lot of factors that go into this, but these are just average hypotheticals. But for $1 a day to get $500,000 in coverage, the perception and the reality are just very far apart. So the first step in closing that gap is to get yourself a true quote. There are options to do this yourself online. If you're not ready to talk to a financial planner, you can simply put this into Google and you will definitely get plenty of quoting tools out there. However, we will forewarn you, they're not always accurate, but they will give you an idea of what a cost would be. But your best bet is to reach out to a financial professional and have them run a true quote for you. And you want to work with a financial professional that has access to all life insurance carriers. You don't want to speak to somebody who can only offer you one carrier, because they may not be the best fit for you. So you want to talk to someone like the advisors at Barnum who have access to every major life insurance carrier throughout the country, because they can give you the best option based on what your needs are and based on what your health is. So myth number one, the cost is too high. Myth number two, I have other financial priorities. So I have other things to deal with first. That's what we hear about. So people essentially put off purchasing life insurance. student loans, credit card debt, mortgage payment, retirement savings, home repairs, purchasing cars, the cost of childcare. All of those things are real, and certainly not dismissing them. It's completely natural to want to focus on what's immediately in front of you, and those costs are certainly immediately in front of you. However, what gets missed is that life insurance isn't just about you, it's about what comes after you. So without life insurance, you will leave debt behind that will not disappear, and it will become somebody else's problem. Your spouse, your kids, your family. Life insurance exists precisely to protect the people you love from financial hardship at the moment they are most vulnerable. I can see how it ends up at the bottom of people's priority list, but it doesn't belong there. It belongs in the conversation alongside all these other priorities, not after them. In addition to that, life insurance, as we know, is based on age and health. It's very, very common that, okay, I'll do that in a few months, and a few months becomes a year, and 1 year becomes 2 years, and 2 years becomes 3 years. And before you know it, your health status is changing. Your age has gone up, and now the cost of the life insurance is different. So I understand the myth of deprioritizing it, but again, it's just going to end up costing you in the long run, literally and figuratively costing you. Okay, myth number 3, I'm not sure I actually need it. This is a big one. We hear this very often. I'm too young, I'm too old, I'm not healthy, or whatever it may be. People come in claiming that they do not need any life insurance. So mostly it's people who are too young, so they think that they have nothing that they need to insure. But when you think about it like retirement planning, the earlier you start, the better off you are, because younger applicants typically qualify for lower premiums, and they are able to lock in a rate while you're healthy, which means that a future health diagnosis won't affect the coverage you already have in place. So while you're young and healthy in your 20s or 30s or 40s, whatever age, while you're young and healthy, your best bet is to get yourself some coverage. So at least you know that that health rating is already locked in, because as you age, the cost of insurance will naturally go up. But any type of change in your health status could affect future policies. So locking in while you're young is a very smart thing to do. People who assume that they are too old, they have to understand that insurance policies can help cover any outstanding debt or final expenses or estate closing costs. So relieving young ones, any loved ones, of these burdens at a really already difficult time is a very good thing to do for them. So most carriers do stop offering policies around age 90, and affordability certainly becomes a factor for people in their 80s, but the option is still there. And if you are healthy at those ages, it's a good option just to work with a financial professional and see if you think it's for you. A number worth sitting with is a record 42% of American adults, that's about 102 million people, say that they need life insurance or need more coverage than they currently have. So when we talk about busting these myths, it's because you all agree that 102 million of you agree that you need either some life insurance or more life insurance than you already have. And you're letting a lot of these myths get in your way. Okay, last one, myth number 4. This is a big one. I don't think I'll qualify. So people assuming that a pre-existing condition will immediately disqualify me. Again, I understand the sensitivities around that. I understand the vulnerability. I understand not wanting to have anybody kind of poke into your health history. That is completely valid. However, it's not entirely accurate to assume that you're going to be disqualified. So there are certain medical conditions that can affect premiums and coverage options. But there are options that still exist for people managing a wide range of health issues, including, diabetes or heart conditions and others like that. Only about 1 in 10 Americans believe they wouldn't qualify, but that belief very often goes completely untested. There are guaranteed issue and simplified issue policies designed specifically for people who may not qualify for traditional underwriting. So if you assume the door is closed, it's always worth checking. You may have more options than you think. This goes back to my earlier comment around working with a financial professional or a firm that has access to a wide range of carriers, because some carriers are more sensitive to medical conditions. Other carriers are more lenient when it comes to medical conditions. So you want to work with a professional who has access to all carriers who can, give you some really great options there. Okay, so 4 myths we just busted. So let's bring this home with a few things that you can actually do this week. So number 1 is check your assumptions. If you've never looked into what life insurance costs for someone your age and at your health profile, go get a real quote. Not a guess, a true quote. The number will possibly surprise you. Okay, so either hop online and do it, or I always say, if you need a financial professional, there's always a link in our bio. You can reach out to speak to anybody at our firm to help get you a quote. Step 2, have the conversation. Life insurance is one of those topics that feels uncomfortable to bring up, but avoiding it doesn't make the need go away. So talk with people in your life who depend on you financially, and then talk with a professional who can help you figure out what makes sense. And then lastly, don't count yourself out. If a health condition has made you assume you can't qualify, please do not let that assumption be the final word. Ask questions. The worst that happens is you'll get a definitive answer and you could plan around it. But the best thing that happens is you may find coverage that you didn't think was possible. Just 29% of consumers say they feel knowledgeable about life insurance. That knowledge gap is a big part of why so many families remain unprotected. Now, you're already ahead just by listening today. So I know that life insurance doesn't ever make anyone's list of exciting financial topics, but the protection it provides for your income, your loved ones, and your legacy do make it one of the most important pieces of a complete financial plan. So please don't let assumptions make that decision for you. If you want to explore what coverage might actually cost and what it could mean for the people who depend on you, please reach out to a financial professional here at Barnum. If you're not sure where to start, head over to barnumfinancialgroup.com for a complimentary financial assessment with one of our financial professionals. Please make sure you're subscribed wherever you listen to your podcast and follow us on Instagram for more. I'm Elizabeth Hiza, and I'll see you next time on Master Your Money and Mindset. Thank you for listening to Master Your Money and Mindset. You can find these episodes on YouTube or wherever you listen to your podcasts. Don't forget to like and subscribe if you enjoyed what you heard. You can follow Barnum Financial Group on LinkedIn and Instagram. Thanks so much.
All opinions expressed by the program participants are solely their current opinions and do not reflect the opinions their respective parent companies or affiliates or the companies with which the program participants are affiliated. Investments or strategies mentioned in this program may not be suitable for you, and you should make your own independent decision regarding them. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as recommendations appropriate for you. You should strongly consider seeking advice from your own investment advisor. Securities and investment advisory services offered through qualified registered representatives of MML Investor Services, LLC. Member SIPC, 6 Corporate Drive, Shelton, Connecticut, 06484, telephone number 203-513-6000.